Back, another earnings miss for Target as the company also cut its full-year sales outlook. The shares are down 4% today, and they're 64% below their 2021 record high. On the earnings call, CEO Brian Cornell blamed economic conditions for the weak performance, in direct contrast to what Amazon CEO Andy Jassy is saying in the last hour that tariffs haven't dented consumer spending. So what are the other factors at play? Let's ask our next guest. Joining us now is Stacey Widlitz, president of SW Retail Advisors. Stacey, I mean, do they need to think about new leadership at some point, or is Brian Cornell sort of able to blame, other factors for their underperformance?
Well, Kelly, as you said, I don't know that it's legitimate to blame rolling back DEI and the environment when you saw TJX with their results, traffic up, Home Depot confirmed, Lowe's confirmed, Walmart comps up 4.5% versus Target down 4%. I don't know that that's legitimate. And I think, the best way to look at it is they said they've, out of the 35 merchandise categories, less than half of them, they're maintaining or growing market share. So that tells you this is an internal problem, not a completely external problem.
Others, if I wanted to paint a more sympathetic picture, would say in their defense, okay, look, they're more discretionary by nature. So at a time when inflation's up or uncertainty is high and consumers are going to go to those, consumables like at Walmart, Target has a different mix. It's going to be a little bit harder to draw people in. Would you buy that argument?
I mean, yes, it's obviously tougher for them versus a Walmart. They have less exposure to food. But at the same time, TJX called out home performing very well, apparel performing very well. So those are the two categories that Target called out as not performing well. So again, it's, the have and have nots. And we see that across the board in retail. It's Adidas killing it versus Nike, down high single digits. So it's very much, I think, execution and losing share. And by the way, Kelly, Kohl's is just pushing share out their front door. Target should be gaining that share. They are their competitor. They're typically located across the street. They've got traffic drivers. Kohl's doesn't.
They got their own problems, Stacey. The CEO just got fired for shacking up with the CEO of his competitor. It was the love, it was romance in aisle two. And there's nothing, by the way, there's nothing wrong with that. But you can't hide it. He just got fired for it. It's on the cover of the Washington Journal.
But she's saying Target should have been a beneficiary. I mean,
that's right.
They're often located right next to each other.
But I'm saying Kohl's is not like the innocent victim in this story. It's not like a romance triangle, right?
But Brian, you think about it, Kohl's, this has been a 70-year saga. I've had a sell on Kohl's since 2019. I mean, the share has been marching down since then. So this has nothing to do with somebody's personal romance. This has to do with execution and the fact that, I don't know if you've been into a Kohl's lately, but it kind of feels like shopping in 1984. So, that share should be going to Target, but yet it is not. It's going to TJX. It's going to Walmart. It's going other places.
So how does the CEO of Target, nice guy, appreciate him coming on, how does he still have a job?
You know what? Brian is the person that turned...
Brian Cornell, not me.
Cornell, not Brian Sullivan, is the one that actually turned this company around years ago, and he's done a great job. But, right now it's about soul searching. There was a leadership change today with their strategy and growth officer. So, there is change going on internally and, to be determined if he's the right one to lead it forward, but he's done it before. So, we need to breathe some life back into this retailer.
And I noted that we noted earlier the market cap is down significantly. I think it's 40 and change billion, which is remarkable. So we should also keep that in mind. We're covering Walmart and Costco and anybody else that Target might be losing share to those other players. Is there anything else, Stacey, that you draw from the raft of reporters today? The home furnishing stocks, like you said, actually doing pretty well. We're just kind of starting to work through retail earnings season. And we started off with this note from Walmart about raising prices, but it sounds like for now spending is holding in okay.
It's holding in okay. And I think you're seeing retailers like Home Depot say, hey, we're going to hold price and we're going to try to gain share. And Lowe's is going to follow along. TJX said the same thing. We're going to hold price. If somebody else moves price, we'll probably follow them. Walmart came out and said they're going to change price and raise. And in some cases, like everybody, every year, you have traffic drivers that you lower price, and you have other things where you can make up the difference. So, but as of now, in terms of promotions that I'm seeing across the board, things are pretty lean. So I just think that, having this blame game for particular names like VF Corp or Target or Kohl's it's about the companies and the brands, not essentially about the environment.
Or shopping like it's 1984. And I'm assuming you're not referring to the fantastic Orwell book. Stacey, thank you.